Hello, Warriors. Good ECB day. Welcome to F.A.C.E. Here's mine. Hey, Bran and Michael Weissman, Sinatra, all my trading warrior brothers and sisters. Okay, let's go to work. Team, how are you?
Hey, Dale.
Hey, Brian, how are you, buddy?
Hey, Dale.
So they said, hey, Kman, so someone said that the ECB was running right over F.A.C.E.
Yeah, 15 minutes, quarter past.
Okay, so we talked about levels before the ECB, and 11.5 was one of, went right there. Almost seems too convenient. I actually went with cable because the rejection, I talked 29.80 to 30. The rejection was stronger there. Where's your head at right now, Ryan?
Hitting the clouds.
Okay. Are you waiting for? Are you waiting for something? Or are you gonna try?
Yeah,
and
we got to see what the ECB is
Okay.
going to bring. I'm obviously keeping an eye on euro sterling. I'm obviously
popped. Yeah.
Yeah, we're back up to the 86.
Yeah, this could have been still. Could be putting in a higher low, bro.
Yeah, it
Right?
could be. I won't mind that, but if we get a dip down, I can add back to my longs and see what the 85 is made of again. So yeah, we could. It's the same old thing. We could be,
Okay.
86.5 in the next 20 minutes, or we could be 85.20. We can be anywhere.
Yeah. Okay.
Everything
can happen. Ryan Littlestone. Everything will happen.
Yeah.
So be ready. Anything and everything. Count on it happening. Kay, what's your your thoughts? I know it's ECB day, but I bet your head's already into BOJ evening.
It's hi Dale, and hey,
how are you, buddy?
It's one that and I've been saying that a couple of times now. We don't only have ECB, but then we have this whole slew of US data, 15 minutes in between what the ECB statement will be, and then Lagarde. It could be a real yo-yo in this market today. But I'd say I'm really open-minded. If euro starts to break 111.5, confirmed by the US data, I guess we are going to have a revisit of the 112.5, three-quarters, which is a really big level. And on the contrary, and that is not my base case, but I think it is there is a chance or a risk that Lagarde is less hawkish, and if we get the double whammy of US data which are not crapping the bed, then we could be looking at 110.25, 110.5 again. And really, it's I don't have
coin toss. It's a coin toss.
Yeah, it is. The one that I found is okay. Yeah, there's two actually. Is that Aussie on this ramp higher overnight into Asia, stopped around 68.25, where it should. Above there may be more to come, but it stopped right there, which is encouraging.
Second lower high. So
yeah. Dollar China did another test below the PBOC fixing and rejected that one again. And then you have your cable at 130 figure 10. We saw some negative data, retail data out this morning. It looks as if euro sterling has found a bid, but then Lagarde has the power to throw that all into the bin as well. So
okay,
there's really a few things that I'm watching. And then since you talked about it, the BOJ is even going to be a bigger towing cost. But what is really, I think what is really a certainty is that the Bank of Japan is going to be a mover, because the options markets really went ballistic, paying up really big prices for protection to the downside.
Yeah.
And so regardless what happens on the Bank of Japan, I think they are going to have to hedge or sell their options or there's going to be, if the announcement is big enough, there's going to be a big move in the incoming. That is for
Okay.
sure.
You know, I don't know a lot about options except that most of them expire worthless. But you know, there are guys that when they look at options, like before an earnings report, it prices in a certain range of like a 7% range the market's expecting. Can you glean that from FX options?
Yeah, I mean, for example, the overnight at the money is now trading at 225 pips, which is big.
Yeah.
That corresponds to about a 40% volatility.
Wow. Okay.
That is big.
Yeah, that's
And
huge.
if you go a little longer, the 1 week, 2 week, if you look at the skew is gigantic for downside. So it's really been a big. There's been a big protection or speculative move put on in the options market for the downside, which makes me think as well there's a fair possibility that if we see that move down to 137, 38, that we are going to run into pretty big demand just due to those option trades.
Yeah, again, that level that Kay is talking about was the old breakout shade under 38.
Yeah,
It looks like a big head and shoulder pattern to me. Hey,
And
held it there. You mean
and
we're
good
in the
morning,
right
guys.
shoulder here? Right
Yeah,
shoulder
yeah,
here, Blake?
the
It
bottom of the
does.
daily cloud is also
Okay.
around here.
All right.
Hey,
cool.
I just
see
want to
it.
let you guys know we have the ECB in less than 10 minutes. We should probably talk about, I know we discussed a little bit about the ECB, but we should probably look at some of the different euro currencies going into this data, because this is going to be a pretty big one, I would assume.
It
It's
went
one
to
of
where
the-
you wanted to sell it when you yesterday during F.A.C.E. Did
Yeah,
you
I
do
mean,
it?
I mean, I did actually. If but if you go look at, I got in a little early, but you know,
Okay.
a little premature.
So what?
What's that?
So what?
So what? It happens. But do you mind if I take the charts?
Yeah,
So we can
no,
go over
not
some
at
of these
all.
euro pairs. All right, and I just want to make sure we do that because it's not like this is like in 15 minutes. And then one of the things about today is that we not only have the ECB 15 minutes before data, we have a crap ton of US data, and then the press conference is 15 minutes after that. So yeah, if you look at the euro chart, and this is from yesterday, you know, we were looking for a move to 111.20 to 111.50. You can see the charts yesterday. We're looking for this move up to here. We went as high today as 111.49 and 0.8 of a pip. So, you know,
Yeah,
0.2
close.
of a pip.
Clean it up.
0.2 of a pips off, you know, whatever.
Yeah.
It's close.
Come on, man. You could
Yeah, I know.
Tighten it up.
We're going to tighten that shit up when we can. But as you can see, really big resistance here. I think this is a big deal when you're looking at the dollar index, where the dollar index is fighting a false breakdown or a breakdown, you know, like, you know, are we going to continue to break down or are we going to go false breakdown? I know you guys talked about the euro sterling, which has been very choppy. And Ryan, you've been trading the heck out of this thing. But how are you feeling about the euro sterling here at current levels?
It's pretty much bang in the middle, 86 of the recent range, 86, 85
Right.
to 87. The short-term range, and we're bang in the middle. I'll say the same thing as I said for the Bank of England when I was looking at the 85 level for longs. If it can't break it on an over extreme hawkish expectations for the BOE, can it break over unhawkish ECB? If we get a test and we can't break it, that firms it up as a level, and I'm going to trade it again.
All right. Well, it seems like you said smack dab in the middle here, which makes it more untouchable for me. I don't know what to do with it here. I'd rather actually just deal with the dollar at this point now that we're past the FOMC. And we should actually discuss about, you know, some of the key things that happened with the FOMC yesterday, but we'll talk about that after the ECB. The Euro Aussie, I mean, we bounced off support following the Australian week CPI data that came out the other day. That's what launched us initially off the support. Then we came back down yesterday, and then we're back up again. But you can see we're right in the middle of this range as well. I'm pretty keen on this range just for a couple of reasons. I know Chris Weston, he brought it up our trade-off show, he was really looking at it ahead of the Australian data. But the thing about the Euro Aussie, and the one thing I always try to think about is, this is a risk on, risk off proxy. And with stocks, and you have the S&P above 4,600 this morning, why we're not, lower in the Euro Aussie is still, especially with China doing everything that's been doing, it's quite surprising. I'm surprised that we're not lower in this pair. Euro Kiwi also in an ascending channel. I see a nice harmonic pattern here from last week, and we're finding support ahead of that channel. And you can see around the, I believe it's a 50 DMA. Yeah, 50 DMA is just really supporting the market as well. So I want to real quick, because we got about 5 minutes. I haven't heard Stelios this morning. Good morning, Stel.
Good morning. How are we?
Hey, good. I want to say, good
Congratulations.
call on,
Okay.
yeah, congratulations on your promotion overnight. Just kidding. No, good call on silver yesterday. Silver actually pretty much led the charge as far as precious metals go, following the Fed. But now going into the ECB, and I'm not going to talk about your how well you did on your call on the Fed, but tell us how you feel about the ECB today.
Well, the ECB, I think, is going to be following slowly the footsteps of the Fed. We're seeing more economic data out of the Eurozone being pretty horrible. So I think they're going to be getting to the point where they pause, but I think they're going to go a little bit longer than the Fed. Same with the Bank of England. But
so they're going to move. They're not going to stay steady today. They are going to ratchet up rates to 4.25, and then it's going to be data dependent. Is that what you're saying?
They're going to hike today. I mean, I think that's a fact, and they're going to be data dependent. Maybe not going to be as I thought the Powell yesterday, the dovish parts were a lot stronger than the hawkish parts that he said. Is the ECB going to do the same today? Maybe not. I mean, they are going to be hiking today, but I think they're slowly going to be following the footsteps of the Fed and pausing. I know how many more do they have? They probably have one more after that, but really after that, it's going to be a close call. So,
okay.
So that's my view. My global view of global price pressures abating remains, and I think all major central banks are going to be acting kind of in the same way, roughly.
Aren't these disinflationary forces that we're feeling globally, aren't they just going to feed into negative earnings moving forward for companies? I mean, that should be like the natural progression, I would think. I mean, we're not seeing it now, obviously, because these pressures really just started over the last couple months, but that should eventually feed into, like real companies that actually make money. I don't know. Anyway, that's a discussion. Okay, that's a discussion for a different day. So let me see. Is Steve here? Steve, Scuba Steve, you here? Scuba Steve. He may or may not be here, but that's okay.
Only got a minute anyway.
Yeah, and we only have a couple minutes. So, Kman, any last minute thoughts for ECB? What's your best one euro currency that you would be looking at?
Yeah, euro sterling and just pure euro dollar.
Oh, that was two. So euro sterling. Okay.
Only one
So
euro.
a market maker there, right there. A market maker right there. Can't get one quote.
All right, so we're gonna keep an eye. Matter of fact, what I'll do is I'm gonna break this up, and we're gonna look at the euro sterling, and then we'll put the euro dollar over here. I don't think that this initial. Do you think this headline's not gonna be the mover? It's gonna be the presser, right?
Yeah, unless they say really, unless they say we're not hiking in SEP in the statement, it's probably just going to wash through, and we have to wait for the presser.
Yeah, so we're gonna get past this 20 pip movement here in the euro. Here, let me clean this. This is an old chart. I have no idea what's all drawn there. There we go. We're gonna get past this 20 pip move that we'll see in the euro. See if we get anything crazy. Probably not. A little head and shoulder pattern developing there intraday, but once we get past that, let's talk about the Fed. And I want you guys to think about some of the things that the Fed said Like one of the things that jumped out to me yesterday was, wait, they're not projecting a recession anymore. It's interesting. We're going to talk about that, but all right, ECB
25 as expected.
As expected. Euro's coming off just a little bit, but it's maybe we'll get this little head and shoulder pattern will make its way down to probably about here-ish, roughly, right? And then we'll find some footing ahead of the actual meeting. If you guys can't see it, it's there. It looks something like that. Anyway, all right. Well, we'll see what happens. But let's talk about the Fed. Dale, what do you think about the Fed? Look? We're at 4,600 in the S&P now, and we continue to truck higher. Looks like this market is not stopping. You can see. Whoops. Let me fix this here. You can see we're up at channel resistance, continue to grind higher. Is there any stopping of this market? I mean, should we just say, screw it, we're going for 5,000 today, and we're going to follow what's the David Hunter, the guy you bring on all the time?
Oh, the melt up 6,000 by October.
Yeah.
Well, we're on our way, aren't we?
It seems like it. I mean, blast off city. So how do you feel about the Fed yesterday, and what jumped out at you? Because what jumped out at me was the Fed is not projecting a recession now, and their internal forecasters, their internal economists. And that's interesting because in order for us to cut rates, what the market is pricing in, we need a recession, because once we get a recession, then we can cut rates. And that's why the market's rallying. But the market said, oh, wait, we're still rallying anyway. So what are your thoughts?
Well, that's exactly it. The strength in the market gives the Fed leeway to keep taking rates up. I think the market, or at least the bond market, there's no problem there yet. So I think Danielle DiMartino used to talk about that. The stronger market gives cover for them to continue to tighten.
Yeah.
So that's what I think. And as far as predictions of recession or not, I'm still in the camp with like Eric and a lot of the guys I interview and they're looking for hard landings. So no recession. I don't believe it. Not with this kind of interest rate increase in the short period of time. And, just taking longer than, probably not even taking longer. It just takes time for it to work into the system. So, and there are some bears that were looking for 46.20-ish. So again, the S&Ps are making new highs. If you put up the S&P chart and then the NASDAQ chart, NASDAQ is not going to be making a new high. The top might be in there.
Are you so sure about that? Are you sure?
Well, I'm never sure when I take risk, but it's possible.
We'll see. All right. Well, Ryan, what stood out? You've had a lot of time to think about it this morning, get up, process, read what other economists have said this morning, other traders are saying. What stuck out to you regarding the Fed yesterday? I mean, you offered some really great coverage in the ForexAnalytix chat room yesterday with all the headlines, but what really stood out to you?
Two things that stood out. Firstly, that Powell just walked a complete middle road. He walked straight down the middle of the road. Every time he said something hawkish, he said something dovish or non-hawkish. He said the big key point was that he said that rates are restrictive. Rates are at restrictive levels. That's probably the biggest line from that. But then the other biggest line said it's a long way to go to 2%, and that they wouldn't take moving at consecutive meetings off the table. But doesn't matter all that. The market knows we're at peak rates for the Fed, be it one more or not. And as I said on the Flow Show, I think now we're going to be trading rate cuts from here on out after the end of this week, maybe after summer.
Don't you find it interesting? He said we can do quantitative tightening and do rate cuts at the same time.
Yeah, I do.
Explain that. Explain it.
Because the rates are above neutral. So, there's easing and there's easing, okay? Coming off from 5%, taking their rates to neutral isn't easing in a sense of the economy is doing really badly. It may well be doing it, but they want rates at a neutral level, be it 2.5%, 3%. They get rates to there, inflation's at 2%, fine. They're happy with that. They can then just tinker with rates as the economy needs. So they can. This phase of cutting rates isn't necessarily just about economic weakness. It's about getting rates to a level they're comfortable sitting at. So they can carry on doing QT and reducing the balance sheet, which they need to do. So yeah, they need to keep reducing the balance sheet, whatever.
Hold
they
on,
need
Steve.
to get the load off.
Yeah. Okay. And did you want to finish your thoughts on all that?
No, that's about it.
Okay, Steve, what did you want to interject here? We were looking.
No, I didn't want to interject.
Earlier,
I heard you calling for me before, but I was in a meeting, so I couldn't answer back.
Oh, well, that was like 10 minutes ago, Steve.
I know, but I just finished the meeting, so what can I do?
By the way, the euro completed its head and shoulder pattern from this morning following the headline. So if you guys are short euros, just keep that in mind as we go into the presser and go into data coming up. We got, obviously a lot of economic data, especially in the US, coming out here in just a minute. Okay. Well, Steve, since you're talking and since you're here and since you're off a meeting, what are your thoughts about the Fed yesterday? We made a couple of points about the Fed, but anything that stuck out to you in particular?
I'm pretty sure you covered everything since you already talked about it. I couldn't hear specifically. What I care mostly about is what has happened following the Fed, right? Because that's what we should be focused on as traders, as you like to, we often talk about macro and fundamentals, and we've done that multiple times. The question is, how did the market react to it? And we know that the initial reaction was that the dollar weakened, and equities seem today to be starting again on a very strong foot. And I think I don't see any real obstacles, since this was the reaction, to see equities move even higher now that we're in the middle of the summer and in general volatility was low. Yesterday I had looked at implied volatility, and I mean yesterday early in the morning I had looked at implied volatility, and the market was not expecting any fireworks from the Fed, and indeed following the price action we didn't get any fireworks. And of course, not getting any fireworks usually favors more risk on, especially in conditions like the ones we have now. I know that we've seen a little bit of a pullback in the euro, in the pound, etc., during the past few hours, but in general, I'm still of the opinion that the path of least resistance is lower for the dollar and higher for equities. I think nothing changed.
All right. So higher for equities, we're definitely getting that. Lower for the dollar, that we'll have to see what happens today. But all right, there's your view. Kman, what stuck out to you yesterday regarding the Fed and what they had to say?
Well, exactly actually what Ryan said, talking about it in length on the flow show. He covered basically all the bases, but what stuck out for me is he's talked about being in restrictive territory, and at the same time saying that rate cuts are probably a year away. He repeated that twice. So
did he say 2025, or did we just put 2 and 2 together?
No. He said that inflation could be back at target in 2025. That's what he said. So to me, it's still the market loves to sell dollars because of the equity markets going higher. So the correlation is there. But now, to me, it's over to the real data. If the rest holds up, there could be a slow move higher in the equities, but I'm not sure whether it's going to be that bearish dollars. But yeah, perhaps one of the few would think that the dollar may not be dead yet.
Yeah, speaking of crap loaded data, no, not only we have jobless claims, we have durable goods orders, GDP. This is advanced numbers, so we're missing a few components. Ryan, what do you think? What do you think of the U.S. data that's incoming today that we should be really paying attention to? Like for me, I think we should be looking at durable goods orders, but because I think jobless claims are kind of tapered off for now, the importance of them, because we're not seeing any spikes. We saw a few spikes up in the 260s a couple of weeks back, but they've kind of pared back unless we start seeing that again. But what are your thoughts here?
Yeah, keep an eye on the durable goods, and particularly that capital goods orders non-defense XAir number. You know, durables is an indicator. You take out the big ticket items like aircraft and whatnot. It's an indicator of consumer goods, white goods, that sort of thing. But the market really is going to move on the GDP number. So if it comes in as expected, fine and dandy. If there's a big variation though, then it could change what everyone thinks about the Fed last night.
All right. Okay. Thank you. And let's what exactly the Fed, you know, it's so ADHD of traders to be like, what happened yesterday? Can you tell me again what we were dealing with yesterday? Oh yeah, it was the Fed. Stelios, what do you think what do you think we should be focused on today as far as trade setups? I mean, we got the stock market that's trading at 4,600. I mean, do you just continue to look for a melt up? Do you look, I mean, you look at precious metals, gold can't scale that 1985 level, which is obviously very, very critical resistance. It's surprising that we might have a head and shoulder pattern still developing here. What are your thoughts?
Well, first of all, there's a disconnect between yields and the dollar. Dollar's weakening, but yields are not going anywhere. So which one is going to one is going to catch up with the other one? I think yields are going to catch up, because I think the ECB today probably is going to have to eventually follow the way the Fed are doing. I mean, Lagarde could be very neutral, but I think she's probably going to put in a few little dovish hints here and there. Let's see. But yields are not following. I think they will eventually catch up with the dollar. But overall, you mentioned gold. Yes, it has a big hurdle to overcome, which is essentially the previous highs in 1985. But we're so close to the all-time highs. I think metals are just getting ready, like the cartoons. They're kind of wiping their feet, but getting ready to go a lot higher, because I think, as I said before, central banks are done or very, very close to being done. And you mentioned Jay Powell saying, we're not looking at rate cuts maybe next year. That's how it starts, right? They're going to say maybe next year. By the way, this is what the market's pricing. April or May next year is the first cut that we're pricing for the Fed. So that's how it starts. They're going to say, maybe next year. Then it gets brought forward if economic data starts to collapse. So let's see. It's a tough one. It's a tough one today.
Well, I just want to talk about one last thing, and just, if you can go, if you're in the ForexAnalytix community, this is our chat room. You can see that, here's Kman, Ryan, Adam, DK, or Anders, myself, and Mark, and you can see everybody just kind of posting their trades. Yesterday, I closed out all my yen positioning. I was short all the dollar yen, Canadian yen, pound yen. I closed that out for a loss, actually. Euro yen, Canadian yen, and then a couple other yen trades just before that, and wipe my butt and my board clean of yen exposure going into the BOJ tonight, because the BOJ is going to be the big one. I think this is the one that's going to create all the volatility. And it's going to happen in Asian trade. A lot of you European traders are going to be sleeping, but I can almost guarantee you, Kman and Ryan will be in the chat room for the BOJ tonight. Are you guys staying up late with popcorn?
Yep.
Getting up early. Staying up late. Getting up early.
Good. All right. So, Kman, you're the most experienced at the BOJ. What about what time should we be looking?
That's always the nice question.
Right. I know. Give me an hour.
Never a preset time, but let's say it's around noon their time.
Good.
Around noon Tokyo time, could be anywhere between 11:30 and 1 p.m. And usually the market thinks that the longer it takes, the more there's a risk that they do something. So so that's your timeline. For as long as they didn't change anything, I've noted that Ueda doesn't hang around, and they put out the statement relatively swiftly. So
All right. Well, except for that first one. That first one, he took forever, didn't he?
Yeah, the first one, yes, but then the ones after, I think, were actually, I actually missed one. because it came out that early. US data out, guys.
Yeah, here it comes. Let's go ahead and put it over to these. Let's go to the 15-minute chart on the dollar yen.
Durable goods is good.
4.7%,
Hot, hot,
massive.
hot.
Durable, good.
Durable
Wow.
goods. Wow, look at this euro just crapping. And remember, we got the ECB upcoming. Aussie's taking it in the and
GDP
GDP
2.4.
2.4. Soft landing all over the shop.
soft landing it is, guys. So if we get a soft landing and rates aren't going to come down, that means they're going to stay high. So maybe the stock market starts going, hey, wait a second. I know I'm really behind the curve here, but maybe 4,600 is a little priced out of little expensive now, so we'll see. We're going to see how the market responds to that, but more importantly, we're going to see how the euro responds to the ECB in about 15
I would
minutes.
say we did a good job prepping people yesterday looking for sales in euro and cable.
Heck yeah.
So, you could have a good week right now if you book it. So anyway, that's what we're here for.
That's right. Look, I'm with you, Dale, and I want to say, guys, team, you guys are awesome. Great job on the Flow Show. I'm sure even though I'm sleeping during the Flow Show,
it's a must see.
It's a must see. If you're up during the European hours and you're not listening to our team, Stelios, Ryan, and Kman every day, you should be, because they broadcast just like 2.5 hours ago. So make sure you're up listening to them. And thank you all for being with us today. But don't leave anywhere, because Dale is going to take us into his interview with his guest, and then I'll see you guys on the morning.
Well, Blake, I received a cancellation notice this morning from.
Well, you know what?
We can
run for let's run for a few more minutes, and then we all need to cut over to the chat room to cover the ECB. But that gives us
great job. I mean, great job on the dollar, guys. What a team! That's why I call you guys the dream team. All right.
Wow. Well, thank you, Dale. We appreciate it. Thank you.
And that guy who just got qualified for the $1 million account, and then he showed his statements. Tell him I'd like to adopt him. I'd like to adopt him to be my grandson.
So, this isn't his first live account he's traded for us. I think the last one was a $500,000, and we've cut him some pretty good checks. So
he's a hell of a trader.
He trades with the trader funding program. So that was last week when we had everybody positioned right for the dollar last week, when the dollar started to rally. We got authorizations for multiple live accounts, people passing their assessments. And he lays it out for you. I know I've made a video telling you guys how to pass a trader funding program assessment. And that was when the rules were even stricter, more strict, but now we've loosened them up. And, he explains to you, you always have to keep your risk management in check. And that's the most important thing when you're trading in general. Like we breed good traders. We breed traders that have good risk management skills. If you don't, and you're just kind of putting it all on black or all on red, the same for you. And
so that's the intangible
trader capital. What?
That's the intangible, Blake, about our program, is that, there are differences between different programs, but the intangible is the support of ForexAnalytix during the process. And that, I think, is an even bigger part of the program being great.
Yeah. No, well, I think it is. I think it is the intangible of making sure that you trade in a risk adherent way in the market. Hey, by the way, Abith asked about the dollar CAD. Yeah. Look, I don't know if you guys have seen it, but S&P is at all-time highs, or not all-time highs, yearly highs, the highs of the year. When that happens, commodity currencies are going to underperform. Right. Aussie, Kiwi, Canadian, those are all currencies that are going to do better in a risk-on environment. Plus, if you trade crude oil, or if you're not looking at crude oil is in breakout territory above the 200-day moving average. So when you put all that together, is it any reason why actually, I would argue that the dollar Canadian should be trading below 130 right now.
Yeah.
And it's not. And that is the most important thing.
It might have one more wash here, Blake, as I look at your chart on the screen.
Yeah, I mean,
for
look,
three.
Channel
See your
support, we
blue
might take
line
us
again. Yeah.
Yeah, we might take us back to 131, you know,
Yeah.
especially let me look at the S&P. Look at the NASDAQ. Look at the Dow.
It's amazing.
We're just cruising higher. No landing, soft landing. All right, anyway, we could go on and on and on. All right, last minute ideas, and then we're gonna go to the ECB. I'll sign off with Ryan and Kman first because I know they need to jump in the chat rooms. Ryan, 111. What's your best idea right now?
My best idea.
Arsenal for the win. I'm just kidding.
I'm watching my dollar yen shorts.
Dollar yen
blowing up.
shorts. Okay. BOJ tonight. You're going to watch those shorts, which they have been moving in your favor up until, you know, might have this bull flag forming. Okay. All right. Kman, one idea. What you thinking right now?
Short euro dollar for as long as below 111.5.
Okay. I like it. Below 111.5 euro dollar on the short side. Stelios, what are you thinking? Yeah, I didn't want to talk to you either. I think he left. He has to go pick up his daughters. Steve, one idea. What are you thinking?
I gave you my idea yesterday. You remember it?
Nope. Give me another one. That's not the same group of people that are listening right now.
USD NOK, mate. USD NOK.
Okay, you still like it, the bear flag pattern. And by the way, it's still flagging. And Dale, how about you?
Well, I'm like Steve. The good idea was yesterday. The execution was early in the morning, shorting cable and euro at the levels we looked for. So who needs another idea today?
Well, I need an idea.
Work the idea,
every
manage
day.
the idea that's working. You don't always have to have another idea.
All right, and I'm with Ryan. I really think the BOJ, the dollar yen is the one to watch, especially going into tonight's BOJ meeting. I do see a bull flag pattern on, you know, inaction from the BOJ. You know, that would put us a lot higher. You'd have to like mark up a move towards 144 ish, you know, which makes sense. Go to the top of this range, but if the BOJ, you know, actions from last week cleared out the market and they tweak YCC, or maybe they just even adjust inflation forecast. Maybe we're trading down at 137 again. I don't know, but I think this is going to be the one to watch. And I don't think there's a better place to be than in the ForexAnalytix chat room tonight. So make sure you guys, you know, take a trial of ForexAnalytix.
What time would it be our time, Blake?
Well, it'd be midnight. Well, midnight for us. Let me see. For us on the West Coast, I think it'd be probably around 8 or 9.
Oh,
so midnight.
Sometimes I stay up that late.
Let's see.
If I do some crystal meth,
Midnight Tokyo to Eastern.
All right.
Let's see. That would be 11.
You still count. You didn't even hear it, Dale.
No, I didn't. I think 11
It's
p.m.
all right.
Eastern, which would be 8 o'clock. 8 o'clock in the morning. 8 o'clock at night for us, Dale.
Yeah.
If you're doing cocaine. What did you say? Did you say you're doing cocaine?
Crystal
sorry,
meth to stay up till 8
meth.
o'clock.
All right.
Yeah.
All right. What?
All right.
How about Somali? I mean, okay. I don't even know what that is. I'm just saying what my teenage kids tell me. All right, guys, have a great one. Thank you. And we'll see you guys in the ForexAnalytix chat room. And if not there, we'll see you guys tomorrow.
Great job. Let's see if team, great job with the ECB. Let's see if you could top it with the BOJ. So I'll be around at 8 o'clock for that. Okay.
Cool.
All right. So have a great day trading, everyone. Should have had some money made on alongside the dollar. This may just be starting too. I know Jays disagrees, but that's what makes a market. And don't just count your pips, count your blessings. See you guys to wrap it up with the BOJ tomorrow on TGIF. Adios. You too. You're very welcome.
Cheers, Dale.